Hi, folks. I just want to give folks time to join the webinar, so sit tight, and we're going to go live and kick this off in a few minutes. Thank you so much for attending. If you want to go ahead, just drop in the chat where you're hailing from today. That'd be pretty cool. Again, thank you so much for joining. We're going to sit tight and let other people come online in a bit. So give us about 2 or 3 minutes. Hi, everyone. We're gonna, if you've just joined, just give us a few minutes to allow other people to join this webinar, and we'll start in a little bit. If you want to go ahead and drop where you're hailing from today in the chat, that'd be cool. Kind of for the folks who just joined too, we are recording this session, so should you want a recording, you can have it. Feel free to drop where you're hailing from in the chat, and we'll get started in a few minutes. All right. I think we're going to go ahead and kick this off. Joe, Laszlo, you ready?
Let's do it.
Thumbs up.
Yes.
Cool. So we're here to talk about ditching annual planning. Is that something that we should do given kind of the state of the market and the world in general today? For the folks who are not familiar with who we are, the folks that are chatting today, I'm the VP of Product Evangelism at GTM Hub. I'm joined by Laszlo Kesmartin and Joe Ottinger. They're both co-founders and partners, strategic advisors, and partners of GTM Hub at the consulting firm OKR Advisors. And we're going to talk to you today about how you can be thinking about navigating kind of the newish or normal, and especially now that we're in our planning season. So we're going to go ahead and kick it off. I mean, this is no surprise to anyone. People had done their annual planning, and then COVID hit, and they threw those PowerPoints out the window. Like, it kind of rocked the entire world. I think it was an awakening for many of us to be thinking about just how much can change in our environments. And if we kind of pull back for a moment at the macro picture, right? There has never been a better time for leadership to provide clarity in a time of a great amount of ambiguity and fear. And the reason why we think so is because we're seeing a rise in inflation rates, which means money is more expensive now. We're looking at an economic downturn. I think most economists at this point are completely certain that this is going to hit us globally, some areas and regions more than others. And we're seeing, especially in tech where we work, we're seeing hiring freezes, we're seeing layoffs. Some of the tech titans are, pulling the so-called purse strings. And a lot of that is because there is a lot of uncertainty. We're going to call it VUCA. Let's just talk about what it is. But let's talk a little bit more about the other part of this as well. We're now entering another industrial revolution, right? We've gone through 3 already. We're on number 4, where we're looking at the blending between the physical, the digital, biological spheres. You're seeing headlines of, and probably in your businesses, the advances in technologies such as artificial intelligence or robotics or IoT. We're seeing like a lot of work happening in genetic engineering, quantum computing. And what does this really produce at the end of the day? For a lot of the world, it's data. We are creating a lot of it. And you see here how that is quantified in terms of zettabytes. And if you're not familiar with a zettabyte, take 1 byte and then raise that to the power of 21 zeros. That's a lot of data. And it's all over the place, from various endpoints. We're talking about edge, things that are core, whether it's public or private clouds. And so we're inundated with data. We've got another, kind of technological advancement via another industrial revolution. And we just got a lot of stuff going on where uncertainty is on the rise. And if you look at, statistics from just looking at the World Uncertainty Index, the reports are saying, yeah, we kind of normalized from the COVID period. If you're wondering what that arrow is, that was COVID. But the general trend line is still increasing. And so I think all of us can easily say that the world is crazy. And we're thinking to ourselves, but we still need to innovate, and we need to be prepared. We need to be more flexible. Fill in the blank on what you need to do. And so the question is, how are we going to manage for volatility, uncertainty, ambiguity, complexity? We can give you an example. I mean, think about microchips. This is the first time in history that I think microchips have been fought over by both personal electronic manufacturers and the car industry. And it takes a while for crystals to grow. You can't speed that up. And so that's volatility. What are the folks going to do that are in the industry that need these things to build their end products? They're going to build in Slack. So there are strategies that we can enact to better position ourselves to embrace, because we'll have to, kind of the VUCA challenges of the world. And I'm going to hand that over to Laszlo to kind of discuss what we can do and how does that relate back to the season that we're in, which is annual planning. Laszlo?
Perfect. Thank you, Jenny. Yes, and I think that's the point that you bring is quite relevant in terms of where we are now and how it feels, right? I think you touched on the VUCA concept, and I think one thing to think about is in terms of where we are, the amount of data that is being created, and how it feels. I think how it feels, it tends to always be a little bit more more volatile. It always feels more, uncertain, complex, and ambiguous at this moment in time. And that's because, we're having to make decisions. We're having to make choices today that, that are impacting us. When we look back, if you go back 10 years, 20 years, VUCA existed as well, right? The world was also complex, but now we can see a lot of patterns and things that we didn't see before. So given that, if you go to the next, if you click next, Jenny, it is a continuum. When you think about, what choices, given this fact, right, the world that we live in today, what choices and assumptions do you make about, how you operate in this kind of a world? On the one hand of the spectrum, you can say, look, I'm going to continue to, operate in a traditional kind of strategic planning and execution mode that we as a company or have always operated in. And some of the assumptions that and beliefs that kind of exist in that line of thinking is, there won't be any major changes within the next year or so. Like, for example, traditional annual planning, that's what we're talking about here. Within the scope of about a year, there shouldn't be any major or drastic changes. I think that we can say that, no, those things are, major changes can happen and they can disrupt us, right? Two, another kind of assumption is that once we set a strategy for our company to move forward, that strategy is set and it is the only possibility to just push forward at this point, and that it is indeed, the truth, the correct strategy to move forward. And we don't need to look at it until it's the next, fiscal year planning, right? That's when the next window of opportunity that exists to revise, look at, and replan on our strategy. And another assumption is that it has to be a long, detailed, document, a PowerPoint that includes a lot of that takes a lot of effort and time to prepare. And what happens with that, of course, is teams start to feel the frustration that it's a very expensive, it's a long process. It takes away from valuable time and resources that the organization has limited resources, and many teams don't see the value of this process when it's done in this kind of a way, right? And many times, the focus is that we see when we're working with clients is that at the beginning, the focus is very much on financial results, scorecards, lagging indicators, and there are some, obviously, you need to look. Well, you do need to look at your financial performance, of course. There are many other very valuable data points to look at, and those have to be, leading indicators to be looked at more frequently. And so on the other side of the spectrum, Jenny, if you will, is, we see, leaders of teams and organizations that say, it's a different perspective, right? They say, the world's moving just too fast. We don't have time for this, to doing this kind of, long, strategic planning, too many changes all the time. And anyway, whatever strategy that we come up with, it's going to become obsolete the next day. That line of thinking exists out there. We see it. And part of the challenge when that exists is, teams, if there is no clear strategy, or a strategy that is not necessarily clearly, communicated, or there's no reference of, then how do we make choices? How do we make decisions as teams anywhere in the organization, not just at the top, right? But also within departments or business units. And that line of thinking assumes execution is what matters most. As long as we deliver flawlessly on our plan, we will win. And no doubt that execution is hugely important, but the teams need to understand where, to what extent, why, to what extent are they executing flawlessly for or towards. And so we believe that there is a middle ground, and there is a more agile way to plan and execute strategies. And that's part of what we do in helping and supporting our clients. And it's first, it starts with having the importance of actually indeed having a clear strategy to win, that the organization as a whole can understand. And it's not only a corporate high-level strategy, it is a strategy that can actually cascade down and be, where you have business units or departments that have their own strategy in alignment with the company. And today there is, because we're also we also support companies with the creation of OKRs. There is also a little bit of a misunderstanding that out there in the market that, if you have OKRs represent your strategy. They're not OKRs are not your strategy. They represent your strategic priorities and what you need to measure, but OKRs alone are not your strategy. So that's really important to understand and make sure that they're an important component of the company strategy, but they're not it alone. And it's really important, if you back up one more point, Jenny, sorry, is, it is that your strategy is really your best bet. It's your best bet of, how you're going to win in the market. It's a hypothesis that you need to constantly be looking at and assess whether, whether the assumptions that you made that assume that, what needs to happen in order for your strategy to be a winning strategy, that those things hold true. And that is not something that you do annually on an annual basis. That's something that you do all the time, constantly. Okay, now you can go on the next. Thanks, Jenny. So, but before we, in order kind of to make sure that we're all talking and understanding what we mean, what do we mean when we say strategy? Because I think when teams talk about annual planning, there's a lot of these concepts, strategy, planning, and even execution are kind of all combined in this concept of annual planning. And the reality is that these are very distinct things, right? The process for creating a strategy. What is a strategy? We really like the, Roger Martin's definition of strategy. We find that that's one that we can align with very well. It's ultimately an integrated set of choices that uniquely positions the company in the market to create sustainable advantage and superior value as it relates to your competition. So the key thing there is it's a set of choices. It's not a plan. It's not a roadmap. Your strategy is what choices you're determining to make around, one, what's your winning aspiration and how are you going to measure that success when you win? Where are you going to play as it relates to specific customers, market segments, channels? And how are you going to differentiate? Are you going to play through or try to win through differentiation or costs? Are you a cost winner, or are you differentiating through specific capabilities? What capabilities do you need to build to actually win in the space that you're choosing to play and win in? And so, that is your strategy, and that is something that you need to spend time and yes, and an annual cycle. It's perfectly fine to get a strategic planning process, have it in place on an annual basis. However, you need to be ready to always be monitored. Is this strategy still holding true based on the key external indicators that we're looking at? And is that if it isn't, what do we do? And you need to be ready to pivot midway through your year or a quarter into it if some of these key components of your strategy are not holding true anymore. And so that's a really important part of this kind of hybrid view that we like to bring to the table. So in terms of planning is the process of designing and thinking about your strategy, your operating plan, your financial plan. And then execution, as we all know that we feel all very comfortable with execution. That's something we do every day. What we argue here is that even during execution, it's really important to keep a close eye on how's the market evolving? How is the market segment behaving? How is the channel, your customers behaving over time, and what's their perception of value? And if any of these things are, again, shifting, what do you do? Do you need to change, tack, your strategy, modify slightly, or do you need to make a major shift? And if the answer is yes, why wait, right? Jenny, if you go to the next slide, that would be great. Thank you. And so in terms of planning, right? So planning, what we want to kind of start with is kind of the baseline, right? What are we talking about? The traditional planning cycles, right? There's strategic planning, operational planning, and financial planning that companies have to do. And traditionally, we're talking about, for example, the strategic planning cycle typically, it takes anywhere between 1 and 3 years, depending on what industry, what size you have, what segment you're in. Whereas the operational planning, most of the time it's, and financial as well, it's on an annual basis. And, what you review it, you assess it and you review it. Strategic planning on a quarterly basis. How are we doing against our strategic plan, QBRs, right? On the operational planning, daily, weekly, monthly, and then financial planning, it's either monthly or quarterly, on a quarterly basis where you review how you're doing. Now, and I'm not going to touch on each and one of these, you can see these, but what we're going to be talking about now is how do we propose this differs, right? What's a different kind of approach that we suggest that you take? And Joe's going to talk about that now.
Thanks, Laszlo and Jenny. So a question, is there a silver bullet? And if there is agility it? And I would argue that it might be it, but how you accomplish it is really difficult. And you need to figure out where you start, how you make progress, and ultimately leads to success. So this is a study from McKinsey. What you'll see is you get real business results from companies that have been able to implement agile practices, and it has a positive impact on customers, on employees, on the operations, and ultimately financials. So the question is, and we'll move to the next slide, how do you create an agile organization? There are a number of methodologies that have started to take root, are growing in popularity and expanding. And so I'll touch on these three, and then we'll go into a little bit more depth. So agile methodology, it's a paradigm shift. It came from software development. It really emphasizes decentralization with autonomous teams. It's continuously prioritizing what's most important and deprioritizing what's not. And this had to be done because, for instance, in IT, it's a shared service. And so when you add something, you have to take something away. A design sprints for speed. So organizing everybody around the most important things that need to be accomplished and ensuring you have the resources. And then the goal is to reduce bureaucracy and to move faster. Beyond budgeting is really moving to a budgeting process that's more decentralized. It's teams determine how they'll spend their budget, and it's regular reviews and adjustments based on priorities. So rather than a budget set in stone for the year, you take in information, you make sure that based on your strategy, your priorities are the same. If they change, you're going to change your resource allocation to support those most important priorities. And then the third kind of methodology that's getting a lot of traction and is highly valuable, we believe companies get a lot of benefit from it, it's OKRs, objectives and key results. And again, you'll see it's based on company and team priorities, and creating a rhythm of business to rapidly learn and adjust based on what's going on. It's an execution oriented, kind of sits between strategy and execution, and it's outcome oriented, and it creates accountability with concrete key results. So let's go a little bit more into each. So agile strategy, it's moving from an analysis focus to an action learning focus. Let's do something, kind of a design thinking approach, and let's get feedback based on our assumptions. In terms of direction, you're providing directional advice, but you're not dictating how to do things. You're giving teams autonomy, but within guidelines, and you're regularly reviewing and refining the strategy, as Laszlo said. So this is one area that has tremendous promise. And where strategy used to be a closed book and put it on the shelf, now it's open and you continue to refine it. So let's move to budgeting. And budgeting may be the most intractable, difficult area to become more agile in. And if you look at a BCG study and report, they talk about three objectives of budgeting. One is, you're setting targets, and they're typically stretch goals, and they're focused on mid and long-term direction. You're allocating resources, which usually is a control process. You want to ensure that whatever you're spending on, it's creating value, and that you can adjust your allocation based on the here and now and what's the most important thing. And then in terms of forecasting, it's very difficult to get unbiased forecast because everybody has an agenda, but to the extent you can, it also has a relatively short-term horizon. And what BCG would argue is that these are in conflict. Trying to accomplish all three is difficult. Let's go to the next slide. So there are certain principles, and there is this methodology beyond budgeting that allows for more agility. I'm not going to go through each one of these. This is for your reference, and you can look through it. But what I will say is there are leadership principles, and actually the leadership management principles are those that you could apply to OKRs, to agile methodology, or to budgeting. But there's a purpose, values, transparency piece of it. There's an organizational engagement piece of it, autonomy, to have people not only do what they feel is right, but autonomy to help to set the goals and input into that, and customers that connecting work with real customer needs. And then management, again, you'll see this in all three methodologies. There's a rhythm of the business that you're organizing around. It's not just annual. Their targets set, they're directional. Their plans and forecasts that are lean and where they can be unbiased. And then you're allocating resources based on priorities, and then evaluating performance for rapid learning. And then rewards in terms of incentive comp and other things are not just financial, but it's financial and accomplishments of strategic, strategic direction, strategic goals that you're able to accomplish. So, if you move to OKRs and agile execution, OKRs really, it was started in Intel. Andy Grove kind of created the base structure. John Doerr took it out to Silicon Valley. And essentially, Andy Grove said, hey, there's two things a company needs to do when they're executing. Where do I want to go is the objective, and how do I pace myself to get there is the key result. And what you find is that in OKRs, you're creating a big shift. The big shift is you're starting with outcomes first. And then you're getting to how am I going to execute towards those outcomes. So rather than, okay, we're going to create projects that's going to lead to us accomplishing certain things, it distinguishes between activities and outcomes. And when you do that, there actually is an organizational shift to focus on the most important things. So I want to give two concrete examples where strategy and budgeting and execution were put in place. So let's start with this public restaurant company, 800 restaurants, 17,000 employees. They were making a strategic shift during COVID. And everybody has this experience of you couldn't go actually to a restaurant. And every restaurant had to figure out how to make takeout and delivery really a key part of their business. And you know that from restaurants that you're aware of, that the dining space was expanded. It was not just in-store dining, but you expanded into outdoor spaces, and companies got really creative. But the reality was people weren't coming in the stores. And this public company, the earnings per share growth, moved to cash preservation. Literally, they went into the PPP program. There was no line of sight into when COVID would be reduced and what the government restrictions would be. And they also moved from incentive comp being almost 100% on financial to incentive compensation for the senior leaders being on financial and strategic KPIs. They also found, and you can go to the next, that they were being disintermediated. So when you go to takeout and delivery, DoorDash actually owns your customer. And so a number of things they needed to do is, one, figure out how they could radically prioritize. And that is essentially stopping anything that was not going to create revenue or cash flow for the company. And this is something you don't have to do just in a crisis. This is a problem. Most companies can't stop doing things. They just keep adding to. So there was radical prioritization because they had to, and they had to optimize their employees, and they had to figure out how they get around DoorDash to continue to own their customer. So that's a real life example. My point in going through that example is you don't need to just do that when there's a crisis. These are some things that create agility. And actually, this restaurant kept in it now. Takeout and delivery, which they became really expert at, is a significantly larger portion of their business than before. Did they build a big strategy around it? No, they were forced to do it, and they did it quickly. So now a private equity-backed healthcare company, and they have an issue and they need to pivot. So a background on the company, Jenny, so they had 70 advanced primary care clinics, 1,700 employees, and a direct-to-employer model. In other words, they had clinics on company campuses, and they provided healthcare services that were greater than you'd find in just a basic clinic you went to. So they had a strategy shift. This was forced on them. They saw, the CEO and senior team saw that their focus on employers and on corporations, that was being disintermediated, and that the providers, the service providers, the healthcare providers, were now kind of owning the customer. And if they were going to win in this market, they needed to figure out how to work with service providers and partner with them to be successful. And so they had to go from this grassroots sales strategy to a strategy of, all right, we're going to focus on providers, and we're going to focus on success in markets versus just this grassroots employer sale. So it caused a really significant shift, and a shift away from a lot of the initiatives which were to win directly employers. And during this shift, they went from an annual budget to saying, we just need quarterly milestones, because we're not going to continue to grow the employer piece of it. We want to keep those, keep our customers happy, but we need to invest in the things we need to do to achieve this new strategy and put the elements in place. They were able to get investment from over $300 million from a private equity firm based on their new strategy, and strategic investment from a very large enterprise that wanted to be a founding partner of this company. And they also went from revenue and EBITDA growth, when they went to quarterly milestones, to cash focus. Okay, we're going to spend our cash on things that create value in this new strategy. And importantly, I'll stress this again, we're not going to spend on things that we were doing in the past. That's not part of our new strategy. So they implemented OKRs because they needed to rapidly learn as they were going into this enterprise service provider market. And they had very clear milestones that they were able to identify and put objectives and key results around it. And that allowed them to create tremendous agility as well. And they deprioritized direct to employer. In fact, it was no more sales was put on that at all. They decided which employers were profitable and which weren't, and they had to make some hard choices. The move from both of these examples to agile practices was dramatic, successful, and is something that you don't need a crisis or a shift in strategy to get there, but it certainly helps. And I spent many years with Harvard professor John Kotter, whose focus was on how to lead strategic change in corporations. And you can either have a burning platform, which is kind of this, or you can create, urgency around a really great opportunity that you see your company has. So what are our conclusions? Laszlo, why don't you start?
Yeah, I think that the first one is what we mentioned early on, right? It's think about your strategy. It's just a hypothesis. It's not something that is necessarily, you cannot be 100% sure that your strategy is going to lead you to success. But what you can do is test it frequently and validate it as frequently as you possibly can. And then, if you're finding that, as also Joe mentioned, it doesn't necessarily have to be a crisis, but if you are finding that, the assumptions that we made about what needs to be true here for this strategy to hold are not, then don't wait until the end of the fiscal year to think about, to begin thinking about how to make that shift. You can start right away, start the thinking process at least, to get there. So that's kind of the first conclusion. Joe, do you want to talk about the next?
Yeah, so we don't see getting rid of annual planning. We think there's a place for it, but what we do believe is it can be greatly streamlined, and it should definitely be iterative. So companies are doing this in different ways. They're having a rolling budget that helps them. They're doing other things that reduce the amount of time it takes for annual planning, and having an ability to refine it over time. And then achieving agility is a large transformation. So the things we're discussing are, if you do it well, it's fantastic, as you saw in the McKinsey study. Doing it well is difficult, but there are tools and methodologies, we mentioned 3, that are helpful. And agile transformation success be the last point, starts at the top. The senior leaders, the CEO, needs to believe it's important, and then it's road mapping it. Where do you start? How do you advance it? And how do you achieve something that creates real value for the company? And with that, I think we'll open it up to questions. Oh, and also we'll let you know that there's a second webinar, and it's really more focused on the OKRs piece of agile strategy execution, and we're going to do a deep dive into that next.
So if you are interested in connecting with any of us, we encourage you to hit us up on LinkedIn. I'm Jenny Harold. And then you can hit up Laszlo, Martin. We have a podcast, Dreams with Deadlines, and you can see our relative websites there. We're going to open up the floor for some questions. So yeah, keep them coming. So the first question that we've gotten is, in order to enact this type of change, where do we begin?
Laszlo, you want to start?
Take that?
Okay, yeah, I'm happy to take that. So
go ahead, Joe.
Again, the place to start is with senior leadership, and that's usually senior leadership of a function, or senior leadership of a business unit, or senior leadership of the company. But it needs to start at the top. And when it starts at the top, the buy-in, I think, first is on the methodology and how it will be able to help with the strategic goals of the company. So it's starting with, okay, are we clear on our strategy? 2, what's working and what's not working? 3, all right, how are we going to move forward in a different way, a more agile way? But it starts with urgency, buy-in around the value that changing the way you do business can bring.
Yeah, and I would add as well, like what's the because it's part of it is it's a little bit circumstantial depending on what is the biggest problem that your company may be facing, right? What is that what's keeping the organization from achieving its purpose? What's the number one thing, right, that should be tackled? And sometimes it's internal things, internal processes, whatever, some internal issues. Many times it's factors outside of the organization that need to be addressed, and that's where strategy comes in. Sometimes it's the lack of understanding and alignment, the lack of alignment that may exist across groups, business units, department, and getting to the kind of sometimes the root cause of that, right? Is there clarity around the strategy, or is there clarity around the goals, ultimately the critical few priorities that the organization needs to achieve? And so, yeah, it's many times it's starting with what is that big problem and going from there.
Yeah, so if we were to summarize kind of a combination of your answers, the first is you need a diagnosis of the problems. And then this needs to be directionally led from leadership to enact the change. To expect that from anyone else in the organization is probably unwise. And most likely because they simply don't have the remit or the authority to make those kinds of changes, which is why if you try to do this in the middle of an organization, you're going to find a lot of frustrated people.
Mm-hmm. Exactly.
I would say. So another question popped up in regards to annual planning. How do we know what should stay and what we should eliminate? You've provided a few examples, I think, Joe, with the restaurants or with this medical business example. They had to make some tough calls, as Laszlo mentioned earlier. Strategy is really about a set of choices and guiding policy, but we're talking about planning here. How do they make the calls when you're talking about this at the operations or business unit level?
I'll start that one too. I think most of what we see in planning is starting from what you did last year and then increasing it proportionally based on what you're trying to do. I think the approach of starting with your priorities, your strategy, your priorities first, and what is going to create real value for the company, making sure those are funded first. And there's always a challenge. You can't let go of the existing business. You need to have a plan for the existing business. The historical business is growing, and you're going to fund the growth. Some it's slowed. And then you've got these new opportunities. And you really want to build your plan around what am I going to do with the existing business? What are my goals? And what am I trying to accomplish with these new initiatives that we believe will create value? And kind of build up from there. Because when you start from what you did in the past, you're going to fund what you did in the past, and it's almost impossible to stop things that are low priority, start activities, initiatives that are low priority.
Laszlo, do you have anything to add to that?
No, I think where to start. I think you hit it on the nail there, Joe. I think I don't disagree at all with that. I think that is the right place to start. I think I would stress and not just underline, right? What is the thing that's going to provide the most value? So if there are obviously, the rest of the business has to continue to run. There are important operations, but in that process, also, think about what may be potentially, detracting. What is detracting from focus? What is detracting from applying and doubling down on an area of the business that can generate a lot more value, and having the having the leadership necessary to defund other aspects of the business if necessary.
Yeah, if I could like put a frame on, I think what both of you said, the way that I think about it is, if we were to kind of take this term, this nebulous term of value, what does that actually mean? If we're talking about shareholder value, let's say you're a listed company, that really boils down to revenue. You need to, be able to be efficient in having a pretty decent operating margin. Like that's important. And then like you need asset efficiency. And then there's going to be some bucket of external forces, especially in Europe. You're thinking about sustainability. There are things that you're going to have to deliver on that front. But then some of this, and then what we're talking about here is strategic value. Like this is the stuff that is unique to your business, some of which would contribute to that overall shareholder value. An example is you might have new product and services that you're going to offer in the market that's going to hit your revenue growth. And so when you're thinking about your annual planning, what you need to think about is, how are you going to continue to run the business as it is, and what parts you might need to shave because perhaps your operating margins aren't that great, or maybe you do have your asset efficiency is not where it needs to be. Maybe there's risk that you're incurring that you shouldn't, that you need to mitigate. But keeping the lights on, the business as usual stuff, you need a fund for that. And what we're discussing in terms of annual planning and that delta is the strategic value, the moat that you're trying to build for that organization, and how you're going to prioritize for outsized impact so that revenue growth is something that you may want to prioritize, which honestly, in this day and age, is an imperative because we need cash flow. Money is more expensive than it ever has been. And so if you're thinking about how to plan effectively, think about keeping the lights on. How are you going to be much more efficient in your spend? And then commensurate with that, how are you continuing to build the moat, which is supposed to support your strategic vision, which is what both Joe and Laszlo had articulated you need as prerequisites to even get to this part of the exercise. And then from there, it really is a rank order of this stuff. I heard someone joke about this, who's a CEO of a unicorn. He was like, do your top 10 priorities, rank order them, and kill 9 of them that aren't number 1. Then the entire room just started clapping because that was the immense amount of focus that he was going to drive his business toward. And that resonates with a lot of people, I think, right now.
Yeah, and there's a book about the one priority. And your point's a really good one. And I'm just finishing a paper on how do you create, what is the value creation methodology? And so think about it in very similar terms. If you're going to create financial value, the long-term value and differentiation is strategic. And the only way you're going to actually create strategic and financial value is you have to really create value for your customers, stakeholders, and your employees. And more, it's ESG kinds of things. So they're all related. And you have to, one helps build on the other.
Absolutely. Absolutely. Well, I think if there are no other questions, we'll maybe awkwardly wait for a few more moments, but I think we're at a good spot unless you all have anything you wanted to add. I feel like this was an amazing session. Thank you so much for your time, Joe and Laszlo. I know we threw a lot out there, but it was really valuable stuff. So thank you so much for sharing your wisdom with us today. Appreciate it.
And thank you, Jenny, for hosting.
Absolutely. Anytime. All right, everyone. Have a good rest of your day.
Bye.